Good afternoon, everyone. Steve Georgia here from Allendale's trading floor. It's May 11th. Very negative day around the markets today. Started off crude oil being down sharply. The dollar working a little bit higher. A lot of talks this morning of J.P. Morgan losing $2 billion in the bonds. We had a fund that blew up yesterday. There's more talks today. A lot of scared money today. So a lot of guys tightening up on positions, and that had the markets lower. The dollar up about 81 cents for the week, up 14 cents today. So still ending up higher, still continuing this path higher. A lot of talk around the financial industry about Europe. That's going to continue. A lot of concern. You've got some Greek debt that's due on Tuesday. So the question is, are they going to be able to pay for it or not? We still have this Greek issue, and that has not gone away. Now there's talk of Moody's downgrading some of these other countries as well, and that had the market under a lot of concern. Stock market right now down about 30 points. Crude oil down $1.25 again today. 95.85 down $2.68 this week. So looking at that crude continuing to take this slide and this dip lower from this point, and doesn't look good. Still could see some further losses again next week. As well. Looking at the grains, very negative day starting off in the beans. Beans yesterday, we had this report out, looked positive, had some pretty positive numbers, but a lot of this outside market influence had pushed these beans lower and starting to see some tightening of money. We've seen the funds ease up on some of their positions in corn. They're short right now wheat, but beans, they had this record long position. They had a record long position in meal as well. So we're seeing, where could the biggest tightening be in? Well, it could be the beans. Today, beans down 49.25 cents for July, down 37.75 for November. We could see some further losses yet. That July contract ended up closing and taking out that 14.09 low. We did close below that. Right now, we're still holding this 14 level. If that gets taken out, we could see a deeper slide come Monday morning again. But the chart right now is rolling over, doesn't look good, and that could keep some pressure here for next week. Beans were down 72.25 cents for the week. Very negative trade there and a very negative close for the week as well. Corn down 6.5 for July, down 2 in December. December was able to push below $5. We went to $4.99 before rebounding. And closing off of these lows. July closed about 9 cents off of their lows. But as I mentioned, still lower for the day, down 6.5 in July. 39.25 cents lower in corn for the week. We continue this negative attitude for corn, and we may see that continue as well. The trade's still trying to chew through this idea that we could see a 1.88 billion carryout for new crop corn. That is certainly negative. But the magic number to watch there for that December contract is $5. A close below $5 will be negative. Probably see some further declines next week if we're able to take that out and close below it. Wheat down about 4 cents today, but down 12.5 for the week. So actually, wheat did the best for the week. Down about 12.5, but there too we did close down below some support. Kind of watch that. Wheat is going to be more of a follower. We're seeing a big volume coming into that corn and also beans, so wheat will tend to follow as well. The metals, as I mentioned, the dollar was higher. Gold down today about $13. Silver down about 28 cents. Sharp declines for gold this week, down about 63 cents for the week. Silver dropping $1.53. So we found a lot of pressure for the metals, and if the dollar continues to strengthen up, we may find some more money come out of the metals yet as well, but still some very negative trade in the metals. As far as livestock, fat cattle down about 62 cents in June, puts that June right at 115.22. A lot of talk today, trading 121 in Colorado. If you look at some of the main areas, that's about steady. That's exactly what they've been expecting. So cash cattle this week, a lot of chatter right at this steady, right at this 120 area. But still for the week, cattle just kind of chopped around. If we see some stronger trade next week, we could see this market continue to firm up. But it's been sideways for most of the week. Hogs, a little different story. Finally finding some kind of support for hogs. The June contract up 75 cents today, 85.25. A lot of talk right now that cash markets were stronger this week. They were certainly higher yesterday. We had cash hogs steady today, so that's supportive at this point. We are starting to see that turnaround. As long as we continue to see the stronger cash market, futures will follow. We should see a little bit stronger move there. So I was hoping we'd see that June contract close above that 85.50. That was a high that we made earlier this week. We did go above it today, but we didn't close above it. So the technicals, yet we're still trying to find a bottom and try to find some support at these levels to take us higher yet. So we'll see what early next week brings for us as well. But a lot of the markets right now are watching more of the macro sense. What is this money flow doing? Today was a good example of seeing money flow coming out of the markets, out of the commodity sector. And if we see some more of that negative trade early next week, the grains may be under pressure as well, mostly due to this money flow issue. Give us a call with any questions you have, 800-262-7538. Or check us out on the web, allendale-inc.com. I hope you guys had a good day today. Have a great weekend, and we'll talk to you next week. Take care.